Good morning, traders. I hope you're well, and welcome to today's edition of the London Session Open. Today is May 13, 2020, and it's 9:48 a.m. in London. And in the next 15 minutes, I'm going to provide you guys with a quick update on the markets, see what's happening. Let's bring up the headlines, talk a little bit what happened yesterday, and a little bit what's going on this morning. First things first, we got some UK data out this morning. The UK contracted by 5.8% in the month of March. That's the monthly change. Apparently, that's the worst reading since for more than 300 years. And this is rather expected given that people are in lockdown. Myself, I'm in central London, and I've been home for I think 2 months now. Haven't, of course, I can leave my house and have a park here, and but I'm not going to the city anymore. I'm not taking takeaways. I'm not consuming as I used to do. In fact, I'm consuming less than before. And this obviously explains why sort of the UK economy is the way it is. And hopefully when they start to reopen, things are going to change. But that's out. The market hasn't really cared too much about it. But the pound dollar is trading at a very interesting level. So we're going to take a look at that. What else? Yesterday, around the end of the trading session, stock markets fell sharply in the US. Please note that in the US. I was looking at Japan, I was looking at Australia, and I didn't see too much of a decline there. But in the US, we had a decline just about the end of the session. In Australia, for example, the market has recuperated most of those losses. And there's no single individual trigger at the time, but after the fact, people talking about the fact that the head of the coronavirus task force in the US, which is the sort of the body that works with the White House and advising strategies on how to deal with this, and Dr. Anthony Fauci, he said that states reopening quickly, that could potentially backfire, and that's something that is worrying people. If you look at the daily numbers of new infections in the US, they are, however, declining, but they are not down substantially. They're still up. I think if we just look at what happened yesterday in the US, they still have like a solid like 22,000 cases per. Let me show you that screen, by the way. They had a 22,000 cases yesterday, and in population wise, how many people are infected over population? I mean, they're second. If you look at this ranking here, Spain is worse with 5,765 infections per 1 million, whereas the US is at 4,256. There are other countries that have higher numbers, but they're usually tiny, like Qatar, which has 8,000, but it's a bit different here. If you look at the number of deaths, I mean, these countries are small, but especially Qatar is a very wealthy country, and places like Singapore as well, very wealthy, have high numbers, but because they're wealthy, they can supply the healthcare to their citizens, and the number of deaths here in Qatar and in Singapore are ridiculously low. This is we'll see how that happens. Is it too early to soften things? I think maybe a little bit too early in the US, maybe another month or so. But we'll see what happens. Another thing as well that was could potentially be one of the movers is that Senator, I think Lindsey Graham, is trying to put in some legislation to force China to cooperate in the investigation to the coronavirus outbreak that started in China, as we know. And if they don't go ahead with that, if they don't refuse to cooperate, there might be sanctions against China. So that's something that's being pushed in the US. This is just one part of it. There's other stuff as well in the US where tensions are rising on both sides here. We talked about this yesterday. Another thing that is out as well is that the Federal Reserve is going to introduce probably a new stress test. And the stress test could potentially limit paying dividends. So we saw banks declining quite sharply yesterday. And what's this whole thing with limiting the dividends? Well, it's the same talk we have here in Europe. So what's happening is that the banks are very fragile in these situations. Everybody knows that. And what happens is that the ECB and the Bank of England, they're all coming out and supporting banks. And in Europe, at least, there's a talk that, if you receive, in places like Sweden and stuff like that, if you receive government help, like, you're not going to be paying out dividends. Dividends is money that the company has, profits that they can hand out to their shareholders. And in Europe, at least, it's very sort of strong and opposed to that, which makes perfect sense. You don't take, government and tax money on one end to support your company, and then you pay out dividends, right? You should take your own money first, and then you go and ask money from the taxpayer. So this was also out around the same time, and that could also be something that influenced, because if you remove that dividend, it does change the value of some of these stocks, because some people would be buying these stocks and then they would just hold them because they know they're going to get the dividends. So that's why they don't bother to sell them. What else was coming up today then? And also maybe a bit of a driver. So at 2 p.m. London time, Federal Reserve's Powell is going to speak. He's the head of the Federal Reserve, and he's going to be doing a webinar, a webcast, and people are going to scrutinize for any comments about negative interest rates. So in October last year, in the minutes of the meeting, they said that the Federal Reserve were overall negative to were not positive, so they didn't like the whole idea of negative interest rates, which we have, for example, in Europe and Japan, because it can hurt the banks. And that's going to be talked about, and they're going to look for that, because it could potentially disrupt the money markets in the US, where there's about $4 trillion, I think, in money markets. And remember, like, US GDP is like 21 trillion or so per year. So there's a huge chunk of money that is just laying there. And if they would go negative, then it's going to be difficult for these, because the people view these as the bank accounts. And if negative interest rates go negative, then that means there's no point holding your market there, because it would potentially, you're not going to get any money return. So that is something that is an issue. President Trump as well yesterday tweeted about negative interest rates, how that helped other countries, and he wants to do the same here. So there's a ton of combinations here of things that are influencing the markets. Now, if you look at, and we'll begin with the S&P. Now, the S&P dropped straight into the buy spot here that I was looking at. I have levels for the Dow Jones and Nasdaq and stuff like that as well. And the Dow Jones as well, we dipped straight into the buy spot, and this, now we are continuing to create higher and higher lows, and the trend continues to be bullish. And I do think we can probably continue to trade higher. So as long as you trade above 27.75, this is a bullish trend. I know the markets are getting, sorry, I'm not showing you the screens. The trend remains bullish here, and we can probably continue to trade upwards here. And you can see we're creating higher and higher lows here in this market. And there's no change to the bias now. Can we go to the lower end of the range? Yeah, of course, we can go down maybe to 28.08. But as long as you trade above this level, we're dealing with an uptrend, and there's no change to my bias here. Now, if you look, and you can look it up yourself, if you look at the Dow Jones, things are actually trading, the market there is turning much more sideways. And if we do start to take out the lows, we could potentially see more of a decline and a reversal in stock markets. And some European stock markets are looking a bit weak as well. What else? German DAX. Here's the German DAX. I have I talked about two buy zones over the last few days. I said you could, if you want, to buy here, and I said my preference though was to buy here at 10,577. Now there's the trend defining level, which is the important level here, hasn't changed. That one remains the same for both. The idea here was, as you know, the market was slowly going up and up and up. Yes, and sometimes you miss out if you don't take action, and that's why I showed you this one. And I said as well yesterday that, for my preference, I do want to see a steeper pullback, and we did get a steeper pullback, and we did reach that buy spot more or less. Actually, we missed this a tiny bit, so we're gonna push this up a bit like that, and do it like that. Okay, and I'm just gonna continue to be bullish now. Now, are there challenges with this market? Yeah, of course. Remove all of this, and it's not really clear here, but you have a head, left, and right shoulder. So you could potentially be dealing with head and shoulders. There are some similar patterns in some of the American stock markets, but if you look at other markets, it's a bit mixed. So I wouldn't pay too much attention to it. I would not pay attention to it now. What else? Gold prices then. So this is gold, and gold prices are not changed. So there's not a lot of activity happening here right now. The market is pretty much unchanged for a whole month. My analysis is the same. So we're creating higher and higher and higher lows. And I think from 1654, people are going to be buying, and then they're going to try to push the price to the upside. The alternative is we take out the high and then we go upwards. Let's take a look at crude oil. Then we're going to take a look at currencies. All right, here's crude oil prices. Crude oil prices is the June future, and the June future had a very nice rally from the bottom. Since then, it's consolidating between 22.36 and 26.48. Take this out and we can go a little bit higher, maybe $30 per barrel, but then we'll just have to see what happens. I would not be buying the breakout. If you really want to have a position on here, which I don't think is a good idea, but if you really want to have one, then maybe if we come down to 23.51, we can be bullish from here. We'll stop just below. The alternative, which is even a better idea, is just to wait for this to take out the low. Take out the low, we could probably have a bit of a push to the downside. I think that's going to be the easiest. And I think as well, we're just like 2 weeks until this month is over. And that means that we'll soon have the expiration of the contract here. And around that time, again, you're going to probably see a bit of panic here. If it looks like crude oil inventories are going to remain elevated. All right, let's continue and let's move along. Euro USD, super easy because nothing has happened here since April 2nd. So we're not going anywhere anytime fast. Nothing has happened for a month. Let's not try to push it. I think we need to break below 107.25. That turns things bearish, or take out the high. GBP versus the USD. So we have that terrible GDP number coming out this morning. Of course, pretty much priced in. Not a big deal, I think. Government is supporting like 7.5 million people that are not getting paid by their companies. And yesterday as well, the head of the Treasury said that they're going to extend this for another 4 months or so. I think it's going to be a gradual, so they're going to be starting to pace off the amounts. Right now you get like 80% of your salary for a maximum of 2.5 grand per month. I think that's, if you're two in households, I'm quite confident to say that's sufficient for most people to pay for mortgages and for food and all you might need. It's more if you it's probably is more issue for maybe a young professional or something that decided to have like an amazing flat in London and is paying like, I don't know, £1,700, and then they have maybe £500 to survive on, or maybe those people are getting a bit under pressure. But I still think that's going to be okay. So people are ignoring the data for now. We'll see what happens going forward. Technically, it's looking really interesting because the break to 122.44 can take price all the way down to 118.82. Take that out, I think I'll turn bearish, and I think my trend finding level is going to be here. What you want to see, though, you want to see this market trade substantially. You not just go a little bit lower. You probably want to see trade to maybe 22.14 or something like that. So it goes down a bit extra. So yeah, 23, another 20 pip or so below this low. I think that's what you want to be looking at. And then what you want to see, you want this to see this continue. If it just goes down a little bit and then it just stops in its track, nothing happens for a few hours, then it's probably time to bring that position back and probably just close out, unless it looks like we're gonna have like a solid close underneath here. Dollar yen is moving down a little bit. And it sort of continues that longer term slow downtrend below 108.09. But I'm neutral here. I see no reason or rush for us, or I don't see any reason for us to rush into this one. Okay, guys, unfortunately, okay, we're gonna take a look at one more market, and we're gonna say good morning to everybody as well. So we have HTM Moyo. Good morning to you, and I hope you're doing well. If you do have any questions, I actually saw you on one of our lists here on investingcube.com. If you do have any question, I think you had an interest in the premium course or something like that. I'm putting it out here, by the way. Sorry about that. If you didn't receive the help you needed, just ping me at info@investingcube.com, and I'll see if I can help you. We have also Zhong View from Australia. I hope I pronounced that correctly. Thanks so much for joining me this morning. And we have as well Marvin, good morning to you. And we have Liz, good morning. And Vincenzo, hope you're doing well. And we have Sarjet as well. Okay, we're going to just look at the Nasdaq 100, and unfortunately then I'm going to leave you. Why does the market react versus the stimulus packages? I don't think it reacts negatively to stimulus package. I mean, the thing is you need to remember the market is forward looking. So if we look at the Nasdaq 100, you know, when everybody was in panic and the number of cases were very high, then we started to go upwards, and they did all these packages. It's just that you needed a combination of the packages and all the other stuff to lift things higher, and eventually we did go higher. It's just that it's pretty much priced in. In regards to negative interest rates, what's happening with the negative interest rates is that when interest rates are low, then the banks, they make money. They will, to make it super simple, imagine they borrow at 0%, right? And then they lend it out to you. For example, in the UK right now, if you want to take a mortgage, fixed mortgage for 5 years, if you have like, depending on how much money you put in deposit, let's say 20%, then you pay about 1.79%. Say 2% to make it easy. So they, in what you could do, they can borrow for 0% right now and lend it to you for 2%. They take a bit of risk on that, but they can do that. So what happens there is that that's their margin. But what happens now is that if negative rates come down to negative, then they can't borrow for 7. They need to pay to borrow money. So say they pay 0.5% there, and then they lend you out for 2%. So then they're just making 1.5. So that margin is declining, and that's the problem with negative interest rates. About the Nasdaq 100, the trend is bullish above 85.60, and my preference is for this to trade a little bit lower, maybe to 88.95. The way this looks like, I think it can go down maybe to 88. So I'm actually going to push this down a little bit. So around 88 or so, that will be my preference. I think the risk reward ratio is probably the best one. Okay, guys, we're gonna wrap things up. Thank you so much for joining me today. If you do have any questions, do you want to know more about our trading courses and stuff like that, you can just click on that little link down here. Let's see if I can send you the link. That one is really popular. You can get it for free or you can pay for it. That's me. And all the stuff I learned over the last couple of years. I started trading in 2006. So if you want to pick up a few strategies, you want to check that out, it's free. As well, we do coaching. Usually what we used to do, just to give you full disclosure here as always, we used to enforce a £2,000 pound deposit to access the coaching, but we have opened that up so you can actually get the course and the coaching and you don't have that limitation on 2,000 pounds. Okay, guys, have a great day. I want to thank so much for everything, and I'll see you guys hopefully tomorrow same time. Don't forget to like the video, clicking well, you need to click on the video, and then also leave a comment if you're watching a recording. Thank you and bye bye.